Hey folks, what's going on? This is Shadow Stars coming again with part two of my thoughts of AMC's earnings. And as I mentioned before, in part two, I'll be discussing the thoughts of AMC's special dividend. So I'm going to go over the press releases, go through some of the SEC filings, and then talk about what I think could be potential results, impacts, and my overall thoughts about how this dividend is going, what it's going to do, and clarify perhaps some of the things that's been going around on Twitter, and give my perspective. So without further ado, let's get to it. So right now, what I have here is AMC's investor relations website. Got the link right up here. You can Google it, AMC Investor Relations. Go to your newsroom. You can pull up the press release. So the key points for the folks that are behind, I'll just bullet point it. You're going to get a special dividend August 15th. It'll be paid by close of business August 19th. The special dividend, AMC Preferred Equity Unit. Pay attention to the designation, that word, unit. It'll be trading on the New York Stock Exchange under APE on that following Monday, August 22nd. We know that this APE unit could convert to common stock, but it'll require the company to propose and for the investors to vote and approve for that, because the amount of authorized shares needs to go up so that they could do the conversion. Important part, we know that off the bat 516 million shares are outstanding, and each share of AMC common stock Class A will be getting one APE unit. So 516 million outstanding shares of common stock, so 516 million AMC APE units. The whole purpose of AMC APE, we see the CEO talking about how it'll provide another avenue for investors to participate in AMC. So we see that the purpose of it will be used to strengthen their balance sheet, pay down debt, raise fresh equity, reduces the near-term survival risk, so gives them additional capital so they could seek investment opportunities. The NFT portion, not interested in, not going to be talking about it. Nonetheless, the CEO is pushing for the fact that this will create great value, or let's say not great, meaningful value. And we know that this APE unit was made possible because of an authorization by shareholders back in 2013. And we know that each APE unit is a share, is a depositary share, and represents an interest in 1/100th of a share of the Series A convertible preferred stock. And each preferred stock is convertible into 100 shares of common stock. So let's go more into what this APE does. We know that APE is not a different share, or let's say it's not splitting the share into half essentially. So it's not your typical 2-to-1 stock split or 3-to-1, whatever to 1 split. It's not an equal splitting of it. So this 516, where'd it go? If we scroll up, shares outstanding of AMC common stock. That's not going to change with this in the immediate future, or immediately. This remains the same. So 516.8 million shares outstanding will remain the same before and after this dividend initially. But you have the creation of this new ticker, APE, this new unit APE. So let's take a look. Let's think about this. You have AMC. Where's the delete? Can I delete this? You know what? Let me start off fresh. That was a little too small. AMC. So you got a share here. It has a certain value. To make calculations easy, let's say 100. Worth $100. So this is pre-dividend. Well, okay. So now, after that date, what happens? You have AMC and you have APE. This value must be the same. So if AMC is 100, well, AMC plus APE must be 100. It has to be the same. The company cannot just magically create value out of thin air. They just can't create money. The value must remain the same. The combined value. So what happens from here? That means value of that AMC share must decrease, whatever the value is. Could be a penny, could be $1, could be $99, whatever. In this example, nonetheless, it needs to go down. So for example, if APE is 10, then AMC is 90, because 90 plus 10 equals 100. The value of AMC pre is the same. Why does this happen? Well, APE is based on the value of what? The value of AMC. The company, the backing of it. It's based on the company. It's not a spin-off. This is different from the case of a spin-off. Because you're not completely splitting the entities of it. Because let's say we have the case of ticker BBIG. This company did a spin-off, because it had BBIG, plus you had Tide. You have a company that's, let's say, once again, 100. Let's say it's worth $100 per share. Well, nonetheless, initially, this value should equal 100. In that sense, it's very similar to the situation of AMC plus APE. But in the case of BBIG, the difference is that, hey, you're now two separate entities. You're two separate companies. The company has lost a specific value amount of whatever Tide is worth. So if Tide is worth 30, BBIG must be worth 70. You'll still reach that value of $100. But going forward, this might not be linked together as much, because this company just cut off a portion of its company. It's separated itself from it. So it's no longer, we know that it's dropped down to 70, but maybe that thing drops down more. Let's say it could drop down to 50. Because maybe this was very profitable. For some reason, they spun it off. So, well, if the main company doesn't do as well, then hey, it might drop in value. And you know what? As a result, maybe Tide does even better now that it's split off from its former parent company. And let's say this goes to 70. Well, now, obviously, this value added together does not equal what it was previously. Or on the flip side, maybe that spinoff was to help the main company. Maybe BBIG wanted to expand into a different sector or different product line or something. So for whatever reason. So maybe instead of 70 now, it goes up to 100. And maybe Tide, it struggles. Maybe it dips down to 20. Nonetheless, does it equal previous value? No. But nonetheless, in the case of AMC, it's the same company. You won't have these scenarios like BBIG or Tide. AMC's value as its share value and Ape's value was based on the same company performance of AMC. So initially, this should remain the same. The combined value should be the same. What could alter it is, let's say, if this Ape or this AMC share, something changes in their valuation fundamentally. And by that I mean, what if the voting rights change? What if further down the line your voting power changes of what type of, how many votes, how the voting percentage is calculated? Maybe it's not an equal 1-to-1. Maybe AMC shares will have basically the power of 2 votes versus 1 Ape share. So it's let's say it's twice as valuable. Or maybe the flip side. Or maybe on certain matters, Ape votes doesn't count for anything. Don't know. But nonetheless, the biggest fact to consider, or biggest point to consider here, is that you have a share of AMC stock. You're going to be getting a dividend, a preferred equity unit called Ape. That combined will be the exact same share value of what it was before it split, or before you got that dividend. So, in theory, share price of AMC should go down by whatever the value Ape is. And to think about it also, think about it this way. The day before the record date to qualify to receive this dividend. So let's look at it. Outstanding August 15th. So on August 15th, when you buy 1 share of AMC, what happens? By August, what is it, 19th? By 19th, you get AMC, and you'll get Ape. Well, what happens? August 22nd, you buy AMC. Do you get Ape? No. Only if you bought it by August 15th. When you bought that share of AMC, you were entitled to get Ape. Come August 22nd, when you buy a share of AMC, you don't get Ape. We already established that, hey, value of AMC will go down by the value of Ape. So, share price of AMC should go down as a result. So, what could change this? What are some factors that might change, perhaps the valuations? Well, maybe the value of Ape goes down even more. So here, let's do a new sheet. So for example, let's say you have Ape here. You have, let's say, 516.8 million Ape. We know that that's going to be distributed out right off the bat. That's because you get one per share outstanding of AMC common stock. If this value goes down, if the number of Ape units goes down, what would happen to the value of Ape? So let's say value of Ape is $5. Well, if you reduce this overall value or number of Ape, well then the value should go up. Following that same logic, let's say 516 million, let's say that doubles. So let's say you have 1.1 billion Ape. So you've now increased the total supply of Ape. How would that affect the value of Ape? If it was $5 before, when there was 516.8 million, if you've essentially diluted it almost in half, you've increased the supply by basically doubling it, this value should go down. Does that mean it'll equally go down to $2.50? It could. It could drop down even further, but we'll have markets determine what this price will be. But nonetheless, normal market factors, common sense logic, that the value will go down because you had so much more supply. But let's say maybe something changes, and you know what, even though supply greatly increases, the demand is insane. So maybe this value goes up from 5. So it could. We don't know. But the assumption would be that suddenly there's a lot more demand than the increase in supply. That's the assumption you would have to have for this value to go up. Will that happen? I don't know. But nonetheless, let's talk about what happens. Why is this Ape unit so important, and why does that worry me? if we look at this, what did the CEO say in regards to APE? It will what? Used in the future to strengthen our balance sheet, pay down debt, raise fresh equity, lessen any near-term survival risk. So basically, it's a method, it's an instrument in which they can raise money. So what's important to understand is how many of these APE units are authorized. Just like we know how many shares of AMC is authorized, how many shares of APE is authorized. For that, let's look at the SEC filings. So I'll start from the beginning here. I've went to the SEC Edgar website, pulled up AMC, and I'm going to be pulling up their filings. So let's look at their S3, Form S3. And you got the little table of contents, all the legal jargon of the forward-looking statements. And here we go. So description of capital stock. AMC has 524 million shares of common stock authorized. They have 50 million shares of preferred stock. So this is all the authorized stock. 524 million of common stock, 50 million of preferred stock. We know that 516 million, 0.8 to be outstanding versus 524 authorized. So you have a gap of what? Just under 8 million? Nonetheless, they have no current preferred share stock outstanding. But they have 50 million shares of preferred stock that's been authorized. And what they're doing right now is they're giving you preferred stock. So let's look at it. They have some more filings to look at, some more 8Ks. So how many is authorized, or how many has been registered? So right now, we know that on August 1st, they declared that special dividend. And here, they have designated 10 million shares of the company's authorized preferred stock as Series A convertible participating preferred stock. $10 million out of the 50 million previously authorized preferred stock. And of this 10 million shares, we know that this unit, 516 million units, will be given out. And here, the more important information. Each equity unit is a share, represents an interest in 1/100th of a share of the preferred stock. So 10 million times 100 is what? 1 billion. So we have 1 billion APE units, essentially, that's been registered, of which 516 are accounted for. So the remaining 1 billion minus 518 million is what? 472 million, right? Approximately. Or sorry, 482 million. So that's how many ape units are left. We know, if you look at how the voting power is distributed currently, we know that when you vote for the directors, 1 vote per equity unit. Equity units and the common stock vote together. Other corporate general matters, 1 vote per share of common stock, 1 vote per equity unit. When you vote to authorize the shares of common stock, same 1-to-1. And we know that, hey, upon approval, 1 equity unit converts to 1 share of common stock. I think this was a little tricky here. I think they meant to say equity unit, that full share, preferred share, would be 1 common stock. So nonetheless, my thought is here. They have 482 million remaining. Of which, who's going to be buying this? And of all the 518 of the original shareholders, how many are going to sell that? How many are going to hold? The combination of this, buying and selling, will determine what the value of this ape will have. But nonetheless, what Adam Aaron and AMC's plan is, sell more of this ape. Right now, they've registered out of the 50 million that they have authorized. They have 10 million that they just registered, meaning they have 40 mil left of the preferred stock. 40 million times 100 is what? 4.04 billion units left. This amount, we have no clue as to when they'll sell it. We don't know. Just like AMC previously, they had a crap ton of shares authorized, and it took them several years for them before they used it. We don't know the timing of when they'll release all this. Are they going to be releasing in batches of 1 billion, 500 million, all 4 billion, 2 billion? I don't know. No one else knows. AMC, the board, and CEO, they'll determine when they want to sell this. But the problem is, do shareholders have a vote on that? No, they don't. Let's see. It's stated multiple times. Company's board of directors may determine its sole discretion. Right. No, that wasn't this part. Oh, there we go. AMC board is authorized without further stockholder approval to establish one or more series of preferred stock and determine, with respect to such series, yada 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 yada. So AMC can choose to sell this amount of ape units whenever. They can, if they strategically do that, they'll raise funds, they'll raise cash to fill up their war chest. So that will allow them to continue to operate their business. But all that is a time-saving measure. Or, not time-saving, it's time-giving measure. We have to see if that money is wisely used. That's why the whole issue of, is it good dilution? Is it bad dilution? Well, nonetheless, it's dilution. It's diluting the value of this. So this ape will get diluted, meaning most likely the value of this will go down. It could go up, but it could also go down. Typically, it goes down when you dilute it, unless the company does really well. It needs to have added value. But nonetheless, that's my thoughts. Part 2 in regards to this ape dividend, this special dividend. There are certainly some positive aspects as to this. It does provide an avenue for AMC to continue to operate its business if it's able to raise more money, because previous avenue of selling more common share stock was blocked. So this gives it an avenue to raise more money. But as a result, how is that going to impact the share value of AMC common stock? And how is that going to affect the voting power of the company? This could change the dynamics of that. It could change of who holds more power in the vote. Does retail have more power? Do the hedge funds and institutions and the other private investment firms, will they hold more power? We'll have to see. But this is another avenue where money is raised. AMC can continue to operate its business while it continues to burn its cash. It's buying them time. We'll have to see how they continue to do in their financial performance. So in part 3, I'm going to be linking this dividend. I'm going to link it more. I'm going to bring up some Excel spreadsheets, and we'll see how the fund rate. I'll show you scenarios of the current projections of what I think of how the company could do, and what sort of money that they would need to continue operating the company. I'm not interested in doing these deep dives and investigations of how it'll expose the shorts or expose the synthetics, how this will be a share count. No, I'm not interested in any of that. What I'm interested in is, how is this going to affect the value of the company? How does this change? Does this change the company's fundamentals? Let's talk about stuff that you can easily realize. Let's not go into deep rabbit holes chasing these very rare situations where you're talking one in millions possibility of finding out market corruption and trying to get rewarded for this. No, for me, I'm in to make money. I'm not here to wait for litigation, wait for investigations, wait for the SEC, the DOJ, blah blah blah. No, I don't want that garbage. For me, I look at a company, I look at the value. Is it undervalued? Is it overvalued? Is it properly valued? Then I'll deploy my capital. Is it a swing trade over a week, a month? Is it an immediate day trade? Hold it for maybe a minute. Maybe I just play 15-second candles. I'm not the type of investor where I go into these rabbit holes. I'm not interested in it. I'm here for consistent gains. You do you, though. This is not financial advice. I'm not a financial advisor. This is just for entertainment purposes, sharing what I know to folks. Hopefully, people listen. Maybe people figure, agree with what I say. Maybe they find out other things. We can share information, grow, learn, and have better understanding. But nonetheless, sorry, this is a very long video. I'll wrap up part 2 here. Part 3 we'll be making throughout the week. We got a new trading week coming in, so I'll have to see. AMC is not really on the high list of stocks I'm planning on trading. Plenty of companies with earnings that I plan on trading, so we'll see. But before the end of the week, probably no later than by Wednesday, I'll have part 3 up, as I'll go dig into Excel sheets, talk about the fundamental financial statements, and combining that with the dividend and the impacts. So until then, thanks folks. Shadow Stars logging out.